I finished college in 1972, and I came back to Fitzgerald and started an insurance agency there. And I had been active in some political campaigns. I had been Jimmy Carter's youth chairman when he ran for governor. And I was involved with David Gambrell's re-election campaign to the Senate. I was on his state committee. From those experiences, I had friends scattered all over the state. And I happened to know a couple of people that had been successful in obtaining bank charters. And I interrogated them about how that worked, how you went about it. So a little history. Before Carter was elected governor, getting a bank charter in Georgia was a very political business. And one of Carter's reforms was to professionalize the banking department and to remove it from politics. And one of the results of that was that there was a flurry of new bank charters. And my friends were a part of that flood. There was general agreement that these were a way to democratize the banking system, and also that they were engines for economic growth in their communities. And I think that thinking was correct. I sensed that Fitzgerald was uniquely positioned to benefit from a new bank, and I discussed it first with Ron Paulk. We were partners in some businesses, and I trusted his judgment. He was my good friend. And Ron had, he explained, the same idea for some time. So we agreed that we would very quietly see what we could put together. And this was in total secrecy. We discussed the idea with Ben Mills. Ben was our good friend. He was our attorney. And to our relief, Ben was cautious about it, but he was interested and wanted to explore it with us. So pretty soon after that, Ben and I made a trip to Cartersville to visit with my friend, who was an attorney who had succeeded in getting a bank charter there, he and a group. And he was very forthcoming, and he spelled out everything they had done in some detail and encouraged us to go for it. So we went back, we met with Ron, and we sort of put together a loose plan. So Ben and I went to Atlanta and met with Jack Dunn, who was the state banking commissioner, to get a sense of what the process was and how we would be received. And he told us what they looked for in a bank application and what not to do, what the red lines were. And so we came back, and pretty soon, with great secrecy, we put together a group of community leaders, one at a time, who became the organizing board of the Bank of Fitzgerald. So that was Ralph Roberts, Marion Massey, Paul Branch, Ray Mann, Buddy Hopkins, Harold Kimball, Larry Kaminsky, Ben Mills, Ron Paulk, and me. So one of the critical parts of the process at that time was the involvement of a major bank who could become your sponsoring bank. The big banks had people on staff who would guide you through the very complicated, arcane process of applying for a charter, hiring a CEO, financing the stock to the directors, arranging for a stock sale or a stock subscription, all this stuff. And you really just had to have the imprimatur of one of the major banks in order to be taken seriously by the banking department. When and if you got your charter, that bank would become your correspondent bank. And At that time, that meant that they would handle the back end of your business, processing checks, all kinds of functions that linked you to the banking system, participating in your larger loans, all that sort of thing, helping with even staffing and things. And a small bank just couldn't function without a relationship with a correspondent bank. And it was a mutually beneficial partnership. This was very lucrative for the big banks. And at the time, the two banks in Fitzgerald had their correspondent relationships. So the National Bank was linked to the CNS Bank. And the First State Bank had a relationship with the First National Bank of Atlanta. The big three banks in Georgia were CNS, Trust Company of Georgia, and First National Bank, in that order. So we set our sights on the Trust Company. And I guess we called them up, introduced ourselves, and set up the first of a long series of secret meetings in Atlanta. This was 1973. So for months, we went back and forth, meeting with their team and doing the steps to sort of put together an application. I have a very vivid memory of one of those meetings when Ben, Marion, and I were meeting with Ed Andrews. Ed Andrews was the senior vice president for correspondent banking of the Trust Company of Georgia, reporting to the president of the bank. And at some point in that meeting, Ben said to Ed, "Now, are you ready to commit to being our correspondent bank and to hold our hands and stick with us through this process, whatever happens?" And Ed said, "Yes." And Ben said, "Have you cleared this with your boss?" And Ed said, "Yes." And it was a really sharp conversation. And I thought at the time that Ben was being a little forceful. But we all knew that bank fights can involve considerable pressure. And so with that assurance, we got to work. The most important part of the process of applying for a bank charter involved the written case. That is the justification for why a new bank is needed. Banks are not like other businesses. They have very special privileges and protections. If they get in trouble or if they fail, they don't just hurt their investors. They damage the community, and they damage the whole banking system. You can see how that's played out right from the Depression all the way up to the last few years. So we put together a case. I wrote most of it. Ben wrote some of it. It involved several themes. I'm just going to mention a couple of them. In Fitzgerald, bank stock ownership and control, especially control, was concentrated into a few hands. Small-town banks hold great power, more so then, I think, than now. And this had the effect of concentrating that power. We made that case very graphically. We knew that the banking department would want to see an application that limited the number of shares that any family or person could have, and that favored wide stock ownership in the community. And that was our plan. The second part of our case was that the existing banks were uniquely conservative in the way that they operated. I don't want to get too much into the weeds, but one of the key measures for any bank is the loan deposit ratio. It's a simple number. You take outstanding loans and deposits, loans over deposits. And it's a measure of risk, but it's also an indicator of what the bank is doing in the community. And if you took the two existing banks in Ben Hill County and aggregated their loan deposit ratio, it came at that time to about 25%. So of the money that the people deposited in those banks, 25% was invested back in the community. That aggregate ratio for Ben Hill County was either the lowest in the state, in the 159 counties in Georgia, or close to the lowest, depending on which recent year you looked at. And just to give you a sense, the statewide average, the aggregate for the whole state loan deposit ratio of all the banks was about 70% at that time. And banks like the CNS Bank had loan deposit ratios of about 95%. So that will give you a sense of where we were. So what the banks were doing was they were investing their deposits in bonds and treasuries. They were being very safe, but they weren't investing back in the community. And we didn't need to tell the banking department that this was detrimental to the local economy. The third part of the case was that the choices in terms of who was able to get a loan were highly personal. They were not based on modern measures of risk. A lot of the local businesses were banking out of town and paying higher interest rates just for personal reasons. But also ordinary working people who should have been bankable were forced to go to the small loan companies and pay much higher interest rates than bank rates. The guy that desperately needed $3,000 to get his wife out of the hospital would be turned away. And that same guy in another Georgia town would have been welcomed. We had been given assurances that our application documents, including the case, would be confidential, seen only by banking officials. So we were very frank. We were very explicit in what we wrote. During the whole process, which lasted more than a year, we did everything in complete secrecy. We were meeting in each other's living rooms. You know, we're all friends, so, and by the way, this is a very powerful bonding experience. So it didn't look strange that we would be having a party, you know. And eventually, in the spring of 1974, we were ready to go public and immediately start taking subscriptions to sell stock. We had been very concerned that just about whether we would be able to easily sell $1 million of stock subscriptions. $1 million was the prescribed number that the banking department wanted to see. And we were nervous about that. The subscriptions are just basically a promise to buy stock when the bank opened, if we succeeded. I mean, part of the reason we were nervous is we had placed limits on how much any one person could own, so we had to have a lot of people. As soon as this became public, however, we were overwhelmed with interest. And we each went into the business of going to see people to sell them stock and fill out the paperwork. And we subscribed the full offering right away. A week or so after we went public, I was just sitting in the office one day and the phone rang, and it was Ed Andrews, the trust company guy. And he said, I remember this very explicitly, he said, "I've got some bad news. You're not going to like it. It's going to make you mad." And I said, "Well, what is it?" And he said, "We're not going to be able to be your correspondent bank." So we were in a very awkward position at this point. We were very exposed. Our application was public. That had substantial ramifications for us personally in our businesses. Those who had businesses that did a lot of banking were especially exposed. I just had a little insurance agency. It wasn't a problem for me so much. But some of our directors had their lines of credit cut off, for example. And it was a strain on personal relationships. It's a small town. We were very exposed. And yet, we had just lost our sponsor, which was part of our lifeline. So, as Marion Massey put it, we had to go to Atlanta with our hats in hand, shopping for a new correspondent bank. And we found that in the Fulton National Bank, and a guy named Tommy Bridges, a young guy who had confidence in us and who came to our rescue. Meanwhile, to our horror, Georgia's Open Records Act was expanded to include the banking department. And although when we submitted our case, we had been assured that it would be confidential, seen only by banking officials, and it included some pretty frank discussion of the banking environment. It was suddenly made available for all to read. And that was just like throwing gas on a fire. The reaction was very hard and very personal. So after we completed subscribing the stock, we turned everything over to the banking department, and there was a 90-day waiting period before we would get a decision. And we were optimistic based on what we'd been told, but of course we were nervous. And then something happened beyond our control. The recession of 1974 was falling into place. It was all over the news. It dominated the news stories. And a few days before the deadline, we were summoned to Atlanta, and we filed into Mr. Dunn's office, and we got the news. No charter. He explained that they were declaring a moratorium on all new bank charters due to the recession. And he told us at the time that our charter would likely have been granted if it hadn't been for this. We had no choice but to go home and wait. By this point, we had considerable confidence in Mr. Dunn. He had earned our trust. He had done everything he said. But a lot of people back home felt that we had been defeated politically because of the history of the banking department. And of course, we couldn't know what was going to happen with the economy. That wait lasted a year, and it was a long year. When the moratorium finally ended, we were notified. We had to start over with the stock subscription. And this time, we were told that we needed to increase the amount of stock to $1.5 million, just a different capitalization safety requirement. Again, there was overwhelming demand. Ultimately, over 400 local people bought or agreed to be subscribers. A lot happened. Just for example, we had to select a prospective CEO, and we interviewed candidates for that position in secrecy because they had positions elsewhere, and so they were being hired contingent, you know. We ultimately entered into an agreement to hire Hugh Turner to be our president, and that became part of the application. We ultimately submitted the application again, and after the waiting period, we were summoned to Atlanta, and this time we were told that our application had been approved. On April 15th, 1976, the ribbon was cut on our temporary headquarters, a little mobile home or whatever you want, modular building, and we went into business. And at the end of our first year, we had total assets of over $6.6 million, which today doesn't sound like a lot for a bank, but at the time, that was considered an astonishing figure for a new bank in a community our size. Meanwhile, despite the considerable startup costs, we had showed a small profit that first year. So we were on our way. And we would go on to add new directors. I'm thinking particularly like Lowell Downing and Sidney Ross. But I think I should say it was William Mann who had the vision that resulted in the astonishing growth of our bank. When we started, our plan was to have a successful local bank right there in Fitzgerald. Nothing more. And if anyone had suggested to us that what we had started would grow to a banking organization with more than $3 billion in assets, we would have just laughed at them. I think it was William who was the visionary who started the process that led to that growth. It was an exciting time because Fitzgerald was poised for a period of growth, and we were a part of that. And the situation in Fitzgerald was, I've described the banking situation, and we did. It was pretty interesting, but it was. We were able to really change that whole process. If you look at what happened, within a matter of a few years, both of the existing banks were acquired. The National Bank first became a CNS bank, and very quickly became a very different kind of organization, and ultimately the same kind of thing happened at the State Bank. So it all changed the town, the way that banking worked, and that means the way that business worked, I think in a really good way. I think it was a catalyst for a new and modern era. We had a good time together, even when it was really uncertain. We just had a kind of a faith that this would come together, and we were right.